Volume is one of the most important factors in your trading. And I will show you how to use volume to make your trading better. A lot of traders think that you have to look only at the tape, but it's very important to look at the volume on a chart, 1, 3, 5, hourly, daily time frame. So I'm a day trader. I teach how to day trade stocks, futures, options, and crypto. You're going to check together with me today some of the best examples and the worst examples that you can find in trading. So when the volume is very clear to read, when we have a strong tape, when we have a strong volume, and when we have a weak volume. So when something is like basically not showing volume and we have some manipulation. So a lot of traders think that there's only one way to read the volume, but it's not like that. You have to learn, first of all, the chart patterns that imply also different type of volume parameters, and then you can start reading the volume. For example, a lot of traders don't understand what is absorbing, what is soaking, what is spoofing, what is for example, a squeeze, what is a bear trap, what is a short trap. Okay, volume in these cases act as a main reason to take the trade or not.
We got close to 500,000 shares in the bag.
So by looking at these examples together with me today, you're going to look how to trade volume and make your trading better. This is how I read the volume. I start from a daily chart. Lay's is a stock that we trade over here from September. Is a recent IPO. So it basically came out 540, down over here to 180. And then you can see the move in the last days, 180 up until 520. So 5 days for this move. I start looking at the daily chart. What is the biggest volume of the day? The biggest volume that we had over here traded almost 70 million shares on the 10-11. So this bar is the bar with the highest volume. So take the high and the low of this bar and start putting like a gray level. This is your demand zone right now. Okay, so this is the most important level on your chart for demand. Then we have a bar over here. Okay, you can see this is a pullback bar with very low volume, relatively low volume. We're trading over here around 10 million. So we had a pullback, but you can see the price held. And then we have another high volume day. So this is a 10-13. So we can set over here another gray zone, and you can take the low of the bar, the high of the bar. So we have on the stock one demand zone from 260 until over here 330, and then a second high volume zone from 380 up until 450. So when, for example, we had Friday, you can see over here the Friday price action. We had a dip, first of all, into the demand zone, right? So the high of this bar over here, it formed all this area as a demand zone. Demand zone means that the price will probably dip and then push, because this is how volume acts. Now, I want to check what happened and how to trace my fibs, and I will use the hourly chart. So you can see over here the price action, demand zone over here. You can see how the volume works on the hourly chart. And I trace my fibs from this low up until this high. And this is what happened on Friday. You can see on Friday, we basically had lower volume, okay, on this bar over here versus the previous 3 days. But the price didn't feel. It basically held. Why? Because this is the main demand zone. So the volume over here is high. You can put even volume profile. I made a video on how to use volume profile years ago. It's pretty interesting. And I made also a video how to use and trace fib levels, support, resistance, trend line. Okay. So check my old videos. They're still very active. I'm teaching traders every single day on how to read technical analysis and price action. This is what happened on Friday on Lace. Fib level, 78% over here at this low. And then we have the high at 536, 535. Pre-market volume is low versus what happened during the day. And then you can see the first part of the move. So the price opens, pops, fails, and closes over here. Now, on this bar, we can see two main things. The first bar is only one of the bar with highest volume, because everybody puts out the order. Everybody wants to trade this stock right away. We traded 1.6 volume. You can see the highest volume of the day. We have two main levels to take care of. This level over here, which you can see is an intraday demand zone. And then we have this level over here. So the price, when it opens, reject this level, fails, bounces from this level, and close basically inside of this range. Volume over here, 1.6. The second bar, you can see, is a breakout bar, right? This breakout bar is not above this previous high volume bar. So you can see that we close above that supply area. We close over here at 516, 517. Volume is around 1.5. And then this is a third bar. Third bar with, again, the highest volume of the day. We make, again, a new high. We close above the previous bar close. We close over here at 518, 519. And then you can see one thing. We start to fill. So on this bar, okay, the bar of the fill that dips into the VWAP and closes over here at 513, we have a lower bar. Now, the point of understanding how the price action works is this. We have a trend break. We have the VWAP break. And you can see that this bar, when it breaks the VWAP, the volume gives you the confirmation because the volume starts to rise over here, all right? So if this would have been a pullback, generally an inside bar, all right, the volume would probably be very small, like one of these bars over here. Instead, on this breakdown, you can see the rise of the volume over here. This means big selling pressure. Okay, so when we say that this is not a strong volume, but instead we have a big selling pressure, okay, everybody is selling over here, everybody is stopping out below the VWAP, that's your confirmation of the move. Now, how to know that this fib level will hold? The volume tells us. And how it tells us? Well, we have a double bottom. You can see that on this breakdown, we don't have high volume like we had over here, right? Over here, we have a breakdown on this VWAP break, and the volume, it rises. So high volume, big selling pressure means continuation of the move. The more we go down with the bars, and each bar is making a lower high, the less volume we have. So at this point over here, with a double bottom, fib level, near the demand zone of the hourly chart, we basically start having buyers. And you can see that we don't have any more that high selling pressure, but instead over here, we start bouncing with relatively low volume. Now, how to know and where to know that this is a good selling opportunity? Remember what we had. This level over here, pre-market resistance, right? Now we can extend this level till here. So when in the second part, right? So we're talking about the second move. We are basically the same level of the previous resistance, previous supply zone area, where we traded that huge amount of volume. Over here, you can see that the volume, and basically over here, we're trading maximum 800K on the 5-minute chart, is not anymore like this. It's half of this. This was 1.6, this is 800. So they're trying over here to break the 1.6, and then over here, 1.5 level of resistance. Okay, we traded over here 1.5, 1.6. Now we trade over here 800K, and the next bar you can see over here, this is a doji. We trade even less. We trade 500K. So much less volume. And what happens over here? We start having like a topping area. So less volume versus this. Lowering volume on the last bars. And we wait what? For a trend line break, just like we had before. Remember when we had the trend line break? You can see the big selling pressure. So again, breaks the VWAP to the downside. In this case, we rise again the volume. So that's a confirmation of our trade. So on this chart, we have two main levels to trade. One, the trend line break and the VWAP fail. Trend line break and VWAP fail. Each time your trade is confirmed by the rise in selling pressure, this and this versus the previous bars. And then another thing is this. Once we have over here this rising, you can see making higher lows, right? Making higher lows. Over here we have lower highs. So means that we have a price that is going up, but the volume is lowering. So there's a divergence. This divergence over here means that it will take a direction. And generally, this direction, if the volume is failing, okay, and we don't have a breakout, okay, then it's only one possibility, breakdown and then unwind. So you can see over here, traders, how really this works perfect for a fail. This is another stock, SOBR. SOBR is a stock that extended a lot in the previous days. This stock yesterday, you can see over here, went on a parabolic move. So the move started like from 130, very low volume, very low volume. This is a 5-minute bar. And then we start having this big volume over here, right? You can see the big volume on this bar. So we have a 311K traded on this bar over here. Now, let me tell you one thing. $3 stock, 5-minute chart, by tracking 300K volume is very low. So if the next bar, this, and often these bars will happen on a halt, okay? So this bar halts, the next bar will open, push, and fill. You can see this is a push and fill, right? Often they will push like in area of resistance like this one. This is another fib level, $350. So you can see that it fails. And it fails with the highest volume of the, I would say, the chart. Now, I don't generally look to trade this bar over here. Sometimes for a feeler, I start looking for the next bars over here. And you can see that I will look for a level of resistance like this one. And I will start looking for how is the volume of these peaks. So my volume over here, you can see the volume of each of these bars is never as big as the first one. So when I start seeing a second and a third bar, and none of these bars can break the previous bar high, I know this is my climax bar. This bar is where we traded the majority of the volume. So I start looking for peaks over here on these next bars, and I start looking to short these peaks. So I start looking for the price to push. And when I see that it starts failing, okay, I start taking some short. This is the VWAP. And again, over here, I start seeing the price pushes. I start taking some short, pushing some short. Of course, I will have my risk set at this level if I'm a little bit more conservative. And instead, if I'm a little bit more aggressive, so I want to stop out very fast, I will use like this high of these bars plus, a few cents. And what I see over here, that the more we go on with these bars, the lower the volume. So we start having over here what? This uptrend and this downtrend in the volume. So there's an divergence also over here. We have higher lows, lower highs. This is the divergence. And again, remember what happens when we have the final breakdown, okay, of our trend line. You can see the volume increasing. So I start really looking for these patterns. And in this bar over here, when we have this crack, I start like looking to put my size. Now, this is just like enough for me for a profit, like that 20, 25 cents. That's good. And goes where? To the next fib level. So remember, volume divergence again, higher lows, lower volume on the trend line break, huge rise in the volume. That is your confirmation, right? So this is some of the techniques I use in volume trading. There are more. I really suggest you to go check my old videos on volume where I explain other things. Very interesting. JTrader, small cap room. Come to see me, jtrader.co. And thank you very much, traders. See you next time.